Hey Bulls and Bears, what is happening? We have a red alert. A red alert. It's really happening this time. The consumer's tapped out, and here is the latest warning, the latest sign. And that's not me saying that. This is the Google search data. Here's what the data is telling us, that people, consumers, are searching for pawn shops near me. And this was a recent article here out of the Hedge here. Cash-strapped Americans are panic searching, quote, pawn shops near me, unquote. The search trend spiked to a record high at the start of July and is an ominous, and this is not me saying that, this is the article, an ominous sign that the consumer may be pawning items or selling items and things that they bought during the boom, so to speak, from 2020, which should have been a bust, but it was turned to a boom, and an inflationary cost of living spike, consumer price index spike, inflation spike, and they're saying that they're selling these things to raise quick money because they're in such severe financial distress. Now, if you go back on this channel, you know that I've been saying that the second half of 2023 is going to be probably a whopper and a doozy, for lack of a better term, for most consumers with these high rates, as the rates have remained elevated. The credit card debt that most people are in, these enormously high car loans that people took out to buy a vehicle, and the rent spiked up. I mean, everything spiked up in cost pretty much. Food costs spiked up. Pretty much everything spiked up. There has to be a point where the average consumer can no longer keep up with this at the levels of debt that the consumer's in. So is this the breaking point? I don't know, but this is another sign. Let me go ahead and move to the side here and put up the chart here. This is the spike in the search for pawn shops near me. Now, they took a few other terms into consideration when they came up with this chart. Some other terms were just pawn shops, open pawn shop near me, pawn shop open, and cash pawn shops near me. So is this a sign of desperation, or is this just some coincidence that doesn't mean anything? Well, look to the right side here of the chart and let me know what you think. Now, the other spike that we saw back in 2019, you see that spike on the chart there. Remember, that was a time where they raised interest rates. They tried to raise interest rates in 2019. The market started collapsing, crashing, and they had to reverse course pretty quickly. Of course, 2020 was right around the corner. Everything shut down in 2020. Rates got dropped again. Inflation took off. That was the other spike, though, 2019. Very interesting that the other spike within the last few years was when interest rates were being increased, and the funds rate and all that. So pretty interesting. Let me know what you think down in the comments. Is that a sign of distress, or does it mean nothing? It's just a coincidence. People are maybe going to pawn shops for the 4th of July. I actually did some shopping during the 4th of July. I don't really shop a lot. To get me to go out to a mall and to go shopping, it's very difficult to do. It's not a very common thing. One, I like to work a lot. Even when I don't have to work, I start doing videos and doing stuff on this channel. I'm always doing something. Either making music, working at my regular job, working at doing YouTube videos, financial information, making music. I also design logos and stuff like that and sell them online at different platforms. I won't go into that. It's not important, but I just try to stay busy creating stuff, doing stuff, working. Not much vacation time. I did have the vacation that I talked about a few days ago where I went up to the mountains here in California. It's pretty good. It's pretty good. Let me go into that a little bit here, then I've got some other important news to get into. But let me know what you think about the pawn shop thing on that chart first. Up in the mountains, looking to either relocate or get a second residence. I'm heavily leaning towards a second residence to have a place to go to in case something happens. Here's the thing. I'm leaning towards not getting a place that far up in the mountains because there's only one road to get in and out. If there's a massive fire, you're going to have a very difficult time getting out with just one road. The trees around there are enormous, and you have to have constant tree cutting and trimming. Otherwise, you're going to have trees falling on your house, or branches falling on your house. Enormous fire risk also with the trees. The size of the spiders is very scary. That's wasn't actually a deal breaker, but we did see 4 huge spiders, bigger than any spiders I've ever seen here where I'm at in San Diego. They were probably this big, probably that big. If you spread out, the legs and stuff, they were big spiders. 4 big spiders in the first 2 days we were there. Huge spiders. At night, they came out at night. They didn't come out in the daytime for some reason. These big spiders came out at night, which was scary. I didn't sleep very well the first couple nights because of that, because we saw them at night right before we went to bed. Anyways, not important, but it is one thing. I guess it is important because that's one of the things that I thought about, as far as living up there. Another thing is the shopping. 2 grocery stores in the little area that I was at. The area is called Crestline. And it doesn't seem like a big deal, but when you can't get the items you want, then you have to drive 40 minutes down to the nearest town on a winding road. That's something to factor in there. Not just the gas costs and the wear and tear on your vehicle, but the danger. The more you drive, the more likely you're going to get into an accident. Anyways, still thinking about the mountains, but not quite sure. Be nice to have a location away from major metropolitan area. And actually right now I'm not too far into San Diego. I'm not downtown San Diego. I'm actually just on the outer outskirts of the city limits in a city called La Mesa that I think a lot of you probably heard of. So it's not too bad. I like a more remote location, but definitely the mountains is something that's a whole different lifestyle, and I knew that it was a different lifestyle, but I didn't know until I actually went up there and stayed. We stayed up there for 4 days. So if you're ever looking to relocate or even get a second residence, I would strongly encourage you to go there and stay for a week if you can, and at least 3 or 4 days to see the things that bother you or the things you like, etc. Anyways, let's get into some other financial economic news. Let's talk about this article today out of Wolf Street. It's wolfstreet.com. Very nice website. I've actually donated to Wolf Richter before, the creator of that website, because he has so many really nice charts and so many good articles, and he sums it up really nicely. The spike that we've seen in vacant commercial real estate and office buildings is the largest spike that we've ever seen, worse than the financial crisis, during a 6-month period. And what we're seeing here is a lot of people are very reluctant to stop working from home. So what started in 2020 with the work at home thing, because of the health crisis and all the fear, people realize that they really love working at home. You work in your pajamas, you work on a laptop, you don't have to worry about inter-office gossip like so many companies. You have people gossiping in the office. If you've ever worked in an office, and even not in an office, even in a factory, any place you have other people, there's going to be gossip. Who's he dating? Who's she dating? Oh, are they hooking up? Like all that stuff, right? So none of that. You save gas. You don't have to pack a lunch. You don't have to buy lunch. To some people, they don't pack a lunch. They buy a lunch or they go out to eat in their local area where they work. That's actually hurting a lot of restaurants that are in these downtown areas, and a lot of businesses in general are hurt by this. But overall, I think it's a good thing. I've always said here, I think it's a good thing. Less pollution. There's all this talk about saving the environment and less pollution. So why not push for companies to keep their people working at home instead of these companies that are calling people back? I've seen a few different companies demanding that their workers come back to the office. I guess they feel they get more productivity out of the people when they're in the office and under under the seeing eye, so to speak, when they're being watched or surveilled. But if the work is done on a computer, which most office work is now, you can still monitor them. You can see if they're doing anything on the computer or if the computer is idle. If you have the proper tech set up for that, which most big companies should. Anyways, Wolf Richter, very nice article. Maybe check that out. But what's going to happen with all these office buildings that are vacant? In one area in New York, they're trying to turn these into apartment buildings, but it's a lot of work. You have to restructure everything, the plumbing, to turn these buildings into individual living units. A lot of work. and I'm not sure if it's even going to be cost effective, but we're going to find out because there's a couple areas where they are trying to do just that, convert empty commercial buildings into condominiums, townhomes, and apartments. All right, so we're going to see how that works out here, and we'll revisit that every once in a while here on this channel. Next, let's talk about the Fed. The Fed talking about raising interest rates again later this year after this pause that we saw in June. And I've said here, and I just want to put it out there again, this is very, very strange how they would vow to have this fight against inflation, but yet they're going to pause or skip a rate hike. It just doesn't make any sense. It doesn't add up. It doesn't pass the sniff test, so to speak. So, in my opinion, this could possibly mean that something very big is on the horizon for the second half of this year. Could just me being paranoid. It doesn't hurt to have 30 days of food, water, and necessary living supplies set aside. Some cash out of the system for barter or trade. We have the threat of war right now, with a lot of global conflicts and threats emerging, happening already, and new ones emerging. When you look at the the power systems and the grid, etc. So be ready for the unexpected. I'm not saying that another 2020 is going to pop up, but something big could be right around the corner because it's very, very strange what they're doing here. It's almost like they're trying to buy time. I'll leave it at that. Let me know what you think. Why would the Fed skip rates if higher rates were the solution to inflation? Please let me know what you think down in the comments. Maybe you can help me make sense out of it. Let's talk about Elon Musk here. So there's been a lot in the news about Elon Musk and Zuckerberg from Facebook. One, they were going to have a cage match. They were going to fight each other, which is very strange, very odd. But now he's threatening to sue Zuckerberg because Zuckerberg's coming out with a Twitter competitor. And supposedly it got a big sign up there in the first few days or first day of 30 million people looking to use the new platform. Twitter, some people say it's big trouble, other people saying it's still doing okay. I actually got off of Twitter, right? I used to post there, but I quit doing it. Not a big fan of Twitter, really. So I didn't really see much improvement with Musk taking over. Not that I liked it that much before, not that I disliked it that much. I just thought it was okay, but I just don't have time. So pretty much I upload to YouTube. Not many other platforms. If you see somebody out there saying that they're me, be very cautious. I'll never ask you for money. I appreciate the donations and the support I get here on this channel. There's a couple other platforms that mirror the videos that I put out here, but I don't put out much content online and stuff like that. I stopped doing TikTok, stuff like that. Stopped doing Twitter. I deleted my account off Twitter, so you won't find me on Twitter. If you do see me on Twitter, it's not me. Beware, be cautious. Alright, let's move on to the next topic here. Folks, we got the Dow Jones hovering right about 34,000. Got the NASDAQ right at about 15,200. The Russell 2,000 at 1850. S&P at 4,400. What's going to happen to the markets? Your guess is as good as mine. I'm preparing for both scenarios. That way I won't be caught flat-footed, going all one direction or going all in on a certain outcome or investment. Try to be diversified is what I would recommend. But I'm not saying you should listen to me, but do your own due diligence. What I'm doing, I'm preparing for prices to continue to rise. I'm bracing for the printing presses to pick back up and more rising cost of living, more rising prices, more inflation. And on the other hand, I'm waiting for the situation that's going to jump out of the woods or out of the shadows, so to speak, like another 2020 scenario where everything gets shut down, where the grid goes down, everything closes up, lockdowns. Pick your poison. But something like that is very likely to happen, especially with all the conflicts and the global situation that we're seeing here. We're going to keep an eye on it for you as usual. What do you guys think about Musk versus Zuck? What do you think about that spike in people searching for pawn shops? Is it another sign that we're about ready to see snap of the U.S. consumer? Everybody, talk to you down in the comments. Hopefully, keep stacking. Big love. Bye for now. Peace.